Welcome to Option Rally TV. Let's take a look at last week's market action and what to expect this coming week. Mario Draghi reverses tone. Stock markets end the week on a down note on Eurasia tensions. And oil takes a major tumble this week. Let's take a quick look at what is happening in the global markets now. Last week was a crazy week for the markets. Geopolitical tensions moved up and down the scales, while Chinese data surprised traders to the downside, leaving lingering concerns. Mario Draghi seemed to make a complete about-face, changing from his hawkish tone on Thursday to a rather dovish stance this week as experts from the Eurozone complained that the overpriced euro was having negative effects on exports. Friday's modest losses for the U.S. stocks capped the worst week since late January for the S&P 500 and Dow Jones Industrial Average as worries over the looming vote in Crimea weighed on sentiment. The S&P 500 ended the day 5.21 points lower at 1841.13, finishing below a technical level of 1850 for the second day in a row. The index recorded a 2% loss over the week. The Dow Jones dropped 0.3% to 16,065.67, falling for the fifth consecutive day. The blue chip index is down 2.4% over the week. Stock markets in Europe have closed the week on a nervous note amid the uncertainty in Ukraine. Germany's DAX staged an afternoon recovery to close in the black, but only after sinking below 9,000 mark earlier. Britain's FTSE 100 was down 0.4%, while the CAC index in France slumped 0.8%. Asian markets had a tough session as losses for Wall Street pushed investors into the Japanese yen. The Nikkei 225 index slid 3.3%, while the Hang Seng dropped nearly 1%. In the foreign exchange market, investors' concerns were mainly geopolitical, with top worries revolving around growth in China and the Russian-Ukraine conflict. Economic data released did little to improve the market's trajectory. Producer prices dropped 0.1% in February, the first decline in 4 months, and short of the consensus for a 0.2% increase. Wholesale prices rose a mere 0.1%, which just met economics consensus. Okay, traders are beginning to take position ahead of this week's FOMC meeting, where Janet Yellen is expected to continue with the current tapering plan. The yen gained the most versus the dollar since January, as demand for haven assets surged amid the biggest dispute between Russia and Western nations since the Cold War and signs of instability in China's economy. The euro rose for a sixth week, the longest stretch since 2007, and reached the highest in more than 2 years. The yen gained 1.9%, the most since the 5 days ended January 24th, to 101.36 per dollar this week. Japan's currency advanced 1.6% to 141.03 per euro. Europe's shared currency rose 0.3% to 1.3914 and touched 1.3967, the highest level since October 2011. Moving to the commodities market, crude oil prices rose, gold rose, and copper prices recovered some lost ground, up 1%. The weaker U.S. dollar helped the dollar-denominated commodity gains. Gold and oil spiked as traders worry about the vote in Crimea this week and the response by Russia after the West threatened tightened sanctions against Moscow. Gold settled up more than 3% for the week, closing up 0.5% today at $13.79 per ounce. Silver traded 1% to settle at $21.41 an ounce, but crude oil closed up but lost 4% this week, settling at $98.89 per barrel. This is Amy Anderson from Option Rally signing off. Follow me on Facebook and watch for our new financial terms of the day and our weekly event news. And of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great week.